In classic Robinhood fashion, the crypto bill freakout and tariff jitters caused the stock to do the stop, drop, and roll. Except, instead of putting out fires, we just started new ones in our portfolios. Welcome back to Fintech Spy, where we analyze, overanalyze, and then roast ourselves for doing both. If you're here for actual financial advice, you're in the wrong place, unless your strategy involves emotional damage and caffeine. This week, Hood's chart looks like it's auditioning for a disaster movie. The price action is so dramatic, I half expected Michael Bay to direct the earnings call. We've got volatility, confusion, and more plot twists than a soap opera marathon. If you're new, buckle up. If you're a regular, you already know the drill. Sarcasm, technicals, and a healthy dose of don't try this at home. Absolutely all quiet this week on the analyst front for reputable analysts. The only piece of interesting bits here is Motley Fool being foolish, saying Robinhood has reached its peak in 2026 due to the S&P 500 inclusion. Sounds like someone got paid off real well as a 2026 bonus. If you're taking advice from Motley Fool, just remember, their sell calls are like reverse psychology for the rest of us. When they say peak, we say, hold my meme stock. Meanwhile, the rest of Wall Street is so quiet, you'd think they were all on a group meditation retreat. Maybe they're just waiting for the next headline to tell them what to think. Or maybe they're busy trying to figure out how to explain their 2025 predictions to their bosses. Either way, the silence is deafening and slightly suspicious. The company has entered its press release blackout as we get ready for earnings. But that doesn't mean the world needs to stop. On the crypto bill side, the Coinbase CEO and all the top banks are doing their best impression of, let's mess it up for everyone else. Mr. Armstrong wants you to think he's fighting for the little guy, while the little guy gets fees up their back end. Real good intentions, fella. If you're wondering who benefits from these bills, just follow the trail of transaction fees and see who's smiling at the end. On the tariff front, we had a throwdown with Trump, then the usual taco roll. This caused the roller coaster effect to be in full play. At least it wasn't as bad as last time or the time before that. If you're keeping score, that's 3 times more drama than a Kardashian group chat. The market's mood swings are so wild, I'm considering sending it a care package of herbal tea and a weighted blanket. On the weekly chart, we're doing what will hopefully be our best fake out to the upside since last April. We gapped down below the fib level and have been green ever since. While the body isn't full yet, hopefully it fattens right up like how I did over the holidays. The RSI and MACD are still lagging though. While this isn't bad per se, it isn't great either. Hopefully the oversold winter will come to an end at earnings so we can climb on out and show how much a fool Motley is. If you're looking for confirmation, just remember, the weekly chart is like your uncle's fishing stories. Sometimes it takes a while to get to the good part, and sometimes you just end up with a soggy boot. The best fake outs start with a little pain, a little hope, and a lot of people yelling at their screens. Over on the daily chart, we can see that progress to the upside is hopefully starting. Friday, we closed with a bullish hammer, followed by 2 small green candles. As long as we can get another green day, we'll break a cycle that we haven't seen in over a month. 3 green days back to back to back. The RSI and MACD are also ready to do their dance to the upside as well. But didn't I say that last week too? If you're waiting for the daily to confirm, just remember, technical indicators are like horoscopes. Sometimes they're eerily accurate. Sometimes they just tell you what you want to hear. The real trick is not getting whiplash from all the reversals. If you're still holding from the last rally, congratulations, you've unlocked the Diamond Hands achievement. If you sold early, don't worry, there's always next week's regret. On the 4-hour, what looks like the reversal we've been praying for might be here. While the candles haven't been the greatest, RSI has gone overbought, and the MACD is heading back towards positive territory. If we can continue in this manner, the continuation that we mentioned on the daily chart might come true. Intraday traders, this is your moment. The 4-hour chart is like speed dating for technical analysis. Lots of signals, not a lot of commitment. If you catch the right move, you're a genius. If you miss it, you're just another person yelling at the VWAP. The reversal setup is fragile, but hey, so is my willpower around free donuts. Looking at the January 23rd options chain, the implied move has weakened a little bit, but with what has transpired so far, a move up might be in the cards. The current implied move is plus or minus 465. On the puts, the 105 open interest has started to evaporate. Now the biggest is at 103, with 7,500 contracts. On the calls, the closest is at 111 with 8,000, followed by 7,800 at 112. Options traders, this is your playground. The open interest is shifting faster than my attention span during a boring webinar. The 103 put wall is looking beefy, but the 111 call wall is where the real drama is. If we break through, expect fireworks. If we stall, expect memes. Either way, someone's getting emotional damage. For hood traders, the world news has caused us to bleed more, but it might be setting us up so that we can move higher. If you're still here after all the volatility, congratulations, you've got more patience than most. Or maybe you just enjoy the chaos. Either way, respect. If you agree, disagree, or think Hood is just coiling for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below. Coffee, memes, or pure denial. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech Spy microscope. No guarantees on price targets, but we will provide world-class over-analysis and high-quality sarcasm. Remember, the only thing more volatile than Hood is my sense of humor after a red week. See you next time, and may your trades be less tragic than your memes.